Rakesh Arora, founder GoIndiaStocks.com, to talk a little bit more about the outlook on the cement sector. Thank you so much for taking time out. In light of the fact that it has been pretty robust for the cement sector on the whole, there's been recovery in profitability for a lot of these companies. We have also seen a large capex pipeline. Demand has been fairly strong. What's your outlook on the demand scenario, and do you believe that we could see a pre-election spend which could give a boost going down the line?
Are you asking me?
That's right, Rakesh. That's for you.
Okay, so see, obviously demand outlook is extremely bright, as we have seen during previous pre-election run-ups, that governments do tend to fast track all the projects, and that really pushes cement demand up. But this time there's another factor which is at play, is that you had a new entrant, Adani Cement, come in, buying Ambuja and ACC, and they have been going through a little bit of turmoil in the last 3 to 4 months. And competition, which is Ultratech, Shri, etc., have been pushing more volume into the market, trying to capture market share. And that is why there's a little bit of disappointment that cement prices haven't really moved up the way people expected, given the demand outlook. I think this scenario will continue. So you would see, better volume numbers, because now probably Ambuja and ACC have also, found their bearing, and they will also push volume. Company yesterday guided for kind of, 15% growth for FY24. So that is a big number. Industry demand would be around 8-9%. So they are trying to push more volume. So I think volume, there is no challenge. Everybody's trying to push more volume, and there is demand also. It's the pricing where the challenge is.
Yeah, pricing remains a bit of a challenge. But do you think, Rakesh, that Street was baking in a lot when it comes to the margin improvement? And that doesn't seem to at least factor in the Q4 numbers. Do you see a big upside, let's say Q1 of this year, etc.?
Yeah, so meaning the margin improvement has come in because of cost reduction. Energy prices have kind of fallen quite sharply, and there would be some follow-through margin expansion in Q1. However, it will all depend for FY24 as a whole, how the industry really behaves. Because if everybody is trying to push volume, pricing can take a backseat. So the improvement in margin because of cost reduction will play out in Q1. Beyond that, it will be all price discipline. So if the industry doesn't really come together, there could be a little bit of disappointment in FY24 at least.
Sure, Rakesh, but last year or last to last year was marked by a lot of consolidation in the sector. Do you think that is largely over now?
See, last year, meaning there was huge cost pressures, and cement prices did go up. And this time we are seeing a reversal. Basically, cost pressures are going away, and cement prices, if they can sustain at this level, I think we should be okay. But if they come under pressure, because normally you see price increases pre-monsoon, and then during monsoon prices tend to go down. But this time around, the price increases haven't really happened. So it's a little bit of a, I would say, tentative situation, given the way industry players are behaving. But overall, scenario is still okay.
My question was consolidation with respect to the M&As that we had seen over the last couple of years. There was a lot of consolidation on that front. Do you think the M&A activity will now stabilize, given the fact they're all taking a lot of brownfield expansion as well, and the capacity is expected to come up?
No, so there are not too many companies which are, up for sale, and not too many sizable companies left actually. So there are a little bit tidbits here and there. So we are hearing in media reports about Sanghi Cement being on the block. So that is probably on the cards in the near future. But beyond that, I'm not really seeing too much activity, and there's not too much of scope also now, given that the big chunk capacity has already been taken out.
Enough. Let's shift focus to the entire metal space. Rakesh, your read-through of the earnings that we've got from Tata Steel.
So Tata Steel, India business did really well, and surprised positively as compared to what people were estimating. And Q1 also, I think there will be some follow through, because cost reduction is happening there also. Coking coal prices have fallen from from $360, $370 to $230. So that's a big improvement. But the wild card here is China. China's demand hasn't really come up despite the reopening and all that expectation. And at the same time, we are staring at a recession in the developed world, largely US, etc. So demand outlook globally is not looking that robust. So while cost pressures have come off, steel prices are also coming off in a big hurry. So China steel prices have actually dropped by almost 20-25% in the last 2-3 months. So that effect is now starting to come into India. Indian steel prices are also moderating. So I think there will be a little bit of tick up in margins in Q1, but I think that is the kind of peak for FY24. Things are going to moderate from there on. So, meaning results are good, valuations are okay, but no real hurry to buy.
Okay, good to get your thoughts on not just cement, but your view on Tata Steel as well. Thank you so much, Rakesh, for taking time out and joining in.